Investors decided that the banks had fallen far enough for the moment, so they started buying again, even though they are still very expensive. And that pushed the whole market higher. And the reason the super funds are buying expensive banks is because they have to do something with the money. Inflows into super funds since before the pandemic are up 90%. $70 billion a year is pouring in, and they can't put it all in bank deposits. The Japanese share market surged more than 3% today after Donald Trump announced a trade deal with Japan. The tariff is 15%, which is less than the 25% he was threatening, but more than the 10% it was. That's the beautiful thing about ambit claims. It's less than they feared, more than it was. Everyone's happy. Coke and coal accelerated its rally on commodity markets along with solid gains by iron ore and gold, and the Aussie dollar has popped up after a week of hovering around 65. And finally, an interesting and telling graph from Westpac. The red dots represent average growth in national income per capita, which is the true measure of national wealth. Now, in the past 5 years, post-COVID, it's gone below zero. That is, it's fallen. In the 80s and 90s, productivity growth and growing labour participation both contributed to income growth. Then, in the decade before the GFC, the terms of trade, basically commodity prices, also pitched in. But since the pandemic, a huge increase in workforce participation has been fully offset by falling productivity. And that's why national income per head has shrunk, leading to the cost of living crisis. And that's finance.